What is happening, people? It is your boy Jack, and I've bought 6 stocks this week.
But Jack, why did you buy 6 stocks? The market's obviously going to crash. You're so stupid, you're going to lose so much money. I bet you put all of your money into Carnival.
Chill out, man. We're not even 30 seconds into the video, and I can already tell there's a few of you guys, you're probably called Cornelius, in the comments right now. Jack, why are you buying stocks right now? The market's obviously going to go lower. Chill out, man. Let me do what I want to do. If I want to buy a few stocks, that's my business. So today we're just going to speak about the 6 stocks that I bought, why I bought those stocks in particular, and what my plans are going forwards. Because even if I don't completely agree with what Cornelius in the comment section has to say, he brings up some valid points. If you enjoyed this video, please support me by hitting that like button and subscribing so that you never miss a future video. It helps me out massively. But anyway, guys, let's get straight into it. Let's get into stock number 1. We're just going to go through them in the order that I actually bought them in. So first up, we have Sysco, a company I've spoken about a few times on the channel. I currently own 4.7 shares of them total, and this week I picked up 2 shares. You'll see I picked up 1 share on the 13th for $46.56, and I picked up my second share on the 15th of April for $45.03. The market is actually open right now, so there is some volatility, but overall, I am down 0.41% in Sysco, so not too bad all things considered. We're pretty much at break even with this company. I actually included this stock in a video of stocks I'm going to buy this week only a few days ago, so if you want to check out that video and see why I want to buy them, go watch that video. I'll have something on the screen now, and I'll also have it down in the description box below. In today's video, I'm not going to be necessarily analysing these stocks and why I am buying them now, but I'll have videos down below to pretty much every stock we speak about today, so that you'll know what my thought process is. But Sysco, food distributor, dividend safety of 55 and a dividend yield of 4%. One thing I really love about Sysco is their uninterrupted dividend streak of 51 plus years. For a long-term dividend investor like me, this is awesome. I want to make it clear quite early on in this video, I don't actually plan on buying many more stocks over the next week, 2 weeks, 3 weeks, because the market's so volatile. I might take a few nibbles out of stocks here and there, but I won't be investing very heavily just because it could potentially go down a whole lot lower. That's what Cornelius was getting at the start of this video. Why am I buying now? It seems stupid to a lot of people, but I just want to increase my positions. From a long-term point of view, I'm happy with these companies, but in the short term, they definitely have room to go lower, so I'm not ignorant of that fact. I know that some people will think it's quite silly to buy stocks right now, and that's fine. This is just me and the type of investor I am. But anyway, that was stock number 1, Sysco. Company number 2, Delta, one I've spoken about an awful lot on this channel. I purchased 1 share on the 13th of April for $22.60. I own 8 total shares in Delta right now, and as of this moment in time, I'm down 19.37% total in Delta. This is one of those companies who definitely has the potential to go an awful lot lower, but in the long term, I think that they will ultimately survive and they will flourish. Delta Airlines will receive $5.4 billion in government aid. You absolutely love to see it as a long-term investor. Airlines as a whole are incredibly cyclical at the best of times, so when something like the virus comes along, these stocks are going to be some of the hardest hit out of any in the world. And we can see that just by having a look at their chart. They were trading up around $60 a share only in February. They fell down as low as around the 21 mark, and we're sitting currently close enough to the $23 mark. Definitely one of the scarier stocks you can be investing in right now, but with all of the news that's come out lately, with all of the help that they're getting, I think Delta is going to be absolutely fine and in the long term will flourish. Next up, baby, Realty Income. So I actually purchased 0.6 of a share altogether, 0.5 of a share at $52.13 of a fill price, and 0.1 of a share at $52.01 fill price. I realised after buying half a share I was on 3.9, so I just bought the extra 0.1 just to have a clean 4 shares total. And this is what my stake in Realty looks like right now. We're up a massive 0.29%, baby, absolutely massive. One of the things I love about this company is they pay their dividend every single month. Most companies pay it every 3 months. Realty give you the dividend every month. And it is a very nice dividend at that, at 5.52% with a dividend safety of 86. Given the times we're in, this is absolutely fantastic. And just for peace of mind, the financial health of Realty Income's tenants is on watch, of course, but the dividend continues to look safe, which is what I want to see. Again, this is a company with a 25 plus year dividend growth streak. From a long-term dividend investor's point of view, that's always absolutely amazing to see. All in all, this is one company I am really happy to be involved with. One other reason I'm quite happy to buy this company now as well is that it looks like it could potentially be undervalued, and there's a lot of stocks right now, despite having fallen so much in price, that are actually overvalued. So it's always nice to be able to buy when a stock is potentially undervalued. Now the next 2 companies I'm just going to lump into one segment because they were very small shares that I bought in each one of them, but the first one was Caterpillar. They were filled on the 15th of April at $110.46 a share, and I only purchased 0.2 of a share. Again, keep in mind, I'm not trying to invest really aggressively right now, because in the back of my mind I'm thinking things could go down a lot further and I could get a lot more stocks for my money. And then the second one we see here is Chevron, and that was on the 15th of April also, and I bought 0.4 of a share with a fill price of $80.22. So the reason I just decided to buy these stocks was because as a whole I had invested less in them in comparison to a lot of my other companies, so I just wanted to bring my overall positions in these companies up. That was it. There was no special news, no special signals, no underlying data. I just wanted to increase my position in them as a whole. Sometimes there doesn't have to be a proper reason, you just want bigger positions. I know that a lot of people will be scared of both of these stocks right now. Chevron, oil industry company, and CAT, construction and machinery equipment company. They're both going to be hit a lot depending on the news that happens to do with oil, so people are kind of afraid of these stocks. But for me, I just think they're two absolutely massive players, and I personally love holding positions in them. And here we're looking at Caterpillar with a dividend yield of 3.74%, a dividend safety of 93, and a dividend streak of 27 plus years. So again, long-term dividend investor over here, baby. I love to see this. And then we come have a look at Chevron, a dividend safety of 65, a lovely dividend yield of 6.4%, and a dividend growth streak of 32 plus years. So again, keeping in mind the kind of investor I am, that's why I'm increasing my stakes in these companies. And the last one, the company I invested the most in by far this week, was Walt Disney. So I bought them in two separate trades. The first one here was for half of a share. The fill price was $103.43, and then only a few minutes later I got the second one for 0.6 of a share at a fill price of $104.35, so 1.1 shares in Disney. And that brought me up to a total of 2.5 shares owned in the company, and I am currently up 4.08% altogether. Again, Disney is a company I've spoken about quite a bit on the channel, but there's just so much that can go right for Disney. Obviously now it's tough. Their theme parks are closed, everything like that. They're not bringing in much there, but a lot of their money doesn't involve those parks. They just brought out Disney Plus, you know what I mean? That is smashing Netflix to bits already. That is going to do absolutely incredible for them down the line. It couldn't have been released at a better time considering the virus and what's going on in the world. People are stuck indoors, people are bored, people need their entertainment. It actually worked out quite well for Disney. But obviously as well, Disney is just a massive company. We have a look at their stock chart. There was a stage where they were less than $1 a share, and it has been very nice, very fast growth pretty much since 2010, and now we're seeing this big massive dip that brings us all the way back, you know, close enough to around 2015. So quite a lot of progress has been wiped out. And don't get me wrong, this is definitely another company I could see go lower, 15, 20, even 30% lower. The potential is always there, and you have to realize that. But again, from a long-term point of view, I think this is actually going to be an amazing growth stock. And what's quite nice about Disney is they have a dividend safety of 60, and they actually have a dividend yield of 1.72%. Obviously, for a dividend investor, that's a relatively low yield, but for such a big player like Disney, that's decent. And they're not new to this dividend. They've actually been paying it for 27 plus years, and they've grown it quite quickly over the past 20 years. It slowed down a little bit the last year, but in general, they've grown this dividend quite quickly. Here's just a little bonus for you guys who have watched until the end of the video. Here is where my account is currently sitting. So as of recording this, I am down a total of 8.18%. Keep in mind, I'm a relatively new investor, and I only got into the market when all of this started going terribly downhill. So I'm quite happy to be down 8%. There was a stage where I was down close to 30%. I got in at the worst time possible. I've just dollar cost averaged the whole way. I've been managed to bring my cost bases down a little bit overall. And yeah, we finally have a few companies who are actually in the green. If you've watched this far, let me know in the comments what your portfolio looks like right now. If you're in the green, if you're in the red, by how much, if you're comfortable sharing that. I'm interested to know where you guys are actually sitting at. And also, obviously, let me know if you picked up any stocks this week, or if you're just stockpiling cash for the future, like I know a lot of people are. But anyway guys, I do hope that you enjoyed this video. If you did, please just let me know by smashing that like button. Subscribe if you want more content. And until the next one guys, peace.